you could throw $1,000 in here, never go below water, and you could turn that all the way into 48K at the very top. So 2,482%. And this is on a $1,000 account. CEO and head quant at happytrader.io. Today is Wednesday, March 27th, 2024. We are moving along in the quarter. We're going to take a look at day trading Bitcoin using happytrader.io, sentiment AI with Trend, which is our indicator. Now you see it, now you don't, now you see it again. And we're not using these super trend type signals. No, you'll absolutely get obliterated using these signals because they don't work. For backtesting, we have our own signals with our own formulas and formulae and multiple data sets that allow us to produce these wonderful uptrend and downtrend signals. But what good is a strategy if it just looks good in the past? That's why we're going to be doing our 5-minute day trading backtest, and we're going to be looking at just this month, the month of March 2024, using happytrader.io. We're going to be doing a long back test where we just go from uptrend to downtrend and use the downtrends as our closing signals. And we're also going to do our long and our short. So we're going to take an uptrend. So we're going to go long on the uptrend, and then on the downtrend, we're going to not only close the uptrend, but take a position short. So we're going to look at this both ways on the 5-minute chart. This is my preferred and many of our traders' preferred time frame for trading Bitcoin. So we're going to be focusing just on day trading as far as the 5-minute chart. So we're going to start with the long and the short. Okay, so for the long and the short, the first thing we want to do is make sure that our buy AI signals are in at our labels, which they are. And you can also see that we have our closed order and then our short order up here. And when we mouse on and mouse off, you can see it's superimposed. So that's good. If we go back, we can see that it's doing what it needs to be doing. And we've also forward tested. If you look at our last video, if you just go into our channel, you can see that our back tests and our forward tests are matching. That's also something really important that not a lot of folks will tell you, is that the back test might look a certain way, but when you go to trade a strategy in real time, the market conditions can change. But overall, we've done a lot of videos on a lot of different time frames, and we've done really well. So let's get into this long and short. We're going to go into our strategy tester, and we have our dates preset in here just for the month of March 2024. However, we're going to do a small account size. We're going to start with $1,000 account, and we're going to see if we get margin called or what happens, or if we take drawdowns. Whatever, right? We want to do a realistic small account size using Bitcoin. So the first thing we want to do is switch from the spot to the futures contract. That's going to be number one. The second thing we want to do is make sure that for the long and the short, we already made sure that our signals are overlaying just perfectly fine. And it's going to look pretty much the same on the futures as the spot. The reason for that is because the Bitcoin CME futures contract and any real Bitcoin futures contract are going to present arbitrage opportunities, combined with the fact that you have all these different exchanges and you have all these different arbitrageurs and hedge funds and high frequency funds keeping these prices in check. So if you're ever wondering how come the futures kind of deviate in the stock market, it's because everything kind of shuts off overnight and you just have the futures running. That's called the Globex session. So just wanted to clear that up. So you're pretty much going to see this same exact thing between spot and the futures. We're going to go into our long and our short. In our strategy tester, we have our month set. We're going to go back and make sure that we have pyramiding off. We don't want to enter more than one trade in the same direction. That's not how we're back testing Happy Trader. We just keep it simple and rudimentary, signal to signal. We're just going to do one single contract, and let's see what we have here. We're going to generate it. And looks pretty choppy is the first thing that I'm really noticing. Someone who's staring a lot at their charts and someone who might not be able to stomach the drawdowns, this 192% drawdown is pretty rough, and that's going to be from this peak here all the way down to here. You have to be aware that when you're trading cryptocurrencies and you're doing something rudimentary or mechanical, a lot of times these really high expectancy mechanical trades, they will return high percentages, but at the cost of a lot of volatility and a lot of lost sleep if you're sitting there looking at it. Now, with the NASDAQ, something you can do is trade the micros. There's also nano contracts that kind of follow the S&P 500 and kind of are arbitrage a little bit better as time goes on, but the bid-ask spread for a lot of those, and the same thing with the XSP on the stock market, is just going to be liquid. And anyway, we have 1192% in 1 month. You can't argue with that. We did have a touch right here where we went below just for a second, but we had 101 closed trades for the month. And then if you look at the list of the trades, we can actually go back and see every single one of them that would be on our chart. We can see starting on the first here, you can see the white ones are winners and the red ones are the losers. Now, if we flip back here, you can see a normal happy trader behavior happening on Bitcoin, about 1 out of 3 trades, but the expectancy is so positive because our winners are running way further than our losers. So you can see a huge winner there, big winner there, and then we also have small losers. But look at the run up. So you had opportunity to take profit even on those losers. So this one was a $4,400 loser, could have taken 2,300 profit. Sometimes you'll get them where you could take more profit than you could if you just held the trade. And that's why when you're trading long and short, you have to be aware of drawdown. Super important. This is something that'll shake a lot of people out. Long and short. You're going long and short the market. You're riding the wave of Bitcoin, and this is what the wave really looks like when it gets momentum in different directions and produces our signals. But overall, 1192.5% going long and short the market, meaning if in a black swan event we get our downtrend signal, which we will get. Happy Trader is set up to do that on all securities. It will, when it crosses a certain threshold, it will produce a downtrend signal, which is why when you go long and short, you're a little more protected at the expense sometimes of a little bit more gains. And with that being said, let's go ahead and switch over. So we had 1192%. We're going to switch over to the long only. Make sure our parameters are exactly the same. We have everything in there. We don't need to do anything else, so we can just generate the report for long only. And we can see there it is. We have not only double percentage wise, so 2,482%. And this is on a $1,000 account. Not only do we have that, but if your brokerage only requires $1,000 or two or three or four or $5,000, your percentage may change slightly, but you're still crushing the best hedge fund out there. And it's all going to be scaling to what your starting account size is compared to how you do. But what we're really concerned about is typically maintaining around this 33.33% profitable range, which is normal for Happy Trader. A max drawdown's gonna happen. It happens on all of the high volatility and high IV. But you can see we're just taking the buy AI, and then this is a loser right here. We're selling here, right? So if you go back, you can see that this one here was a winning trade. And you can see our winning trades are just so much more robust, like this one right here, than our closeout losing trades. So we caught from this move on this trade all the way up to here. Now, could we have sold into strength? That's what I personally like to do if I am scalping or if I'm doing anything short term. So for the 5 minute chart, that's going to be at your discretion depending on how you trade. Happy Trader's just here to be a guide for your trading style. So that's going to be that. So we're going to go back into the strategy tester, and you can see the list of trades, just absolutely monstrous trades and lots of wins here. And then again, run ups on our losers. Look at that one there, $15,000 run up on a $4,400 loser, just holding the trade, right? Not always the smartest thing to just go signal to signal, nor do we preach that that's how Happy Trader should be traded, but we do have really, really good positive expectancy, and that's all we could hope for. And, to be able to achieve 2,400% on a 1K account, assuming no margin calls, assuming your broker lets you trade one of these contracts with 1K. If they let you trade it with 5K or 2,500, this percentage will change accordingly, but you're still crushing the market, right? So I'll show you that. For example, let's do a $10,000 account with one contract, which any broker would be able to handle, okay? 248%, right? So you can see that for futures and percentage wise, we're not really looking at the percentage gain. We are in regard to we're doing better than the market, but percentage gain real actual percentage gain, not how much the index moves in a year, but your portfolio gain depends on how much money, how much buying power you're using, a buying power ratio compared to the notional of the contract, right? You're going to adjust, but the point be made here that if you start with $1,000, right, and you put one contract on and you're able to trade on your broker with a $1,000 margin per one contract of Bitcoin, which is not completely unheard of. Well, if you go down below, yeah, you'll get a margin call pretty quickly. You get an email saying you need to deposit more funds, but there's a couple ways to get out of these trades and mitigate them until they go back into positive expectancy. And then knowing you're using something with positive expectancy like Happy Trader, you're able to put on a delta hedge. For instance, you could go short GBTC put options, whatever which way you want to hedge this thing. You could even hedge it with like Ethereum if you want, but it's non-correlated, so those asset pairs are going to have their own kind of wide spread between them. There's different ways to do it. You could even do it with the NASDAQ, and then when your core position gets back above water, you're able to take gains going into strength, like I like to do if I'm day trading. On these big runs up here, I'm probably taking profit here, I'm probably taking profit here, and then I like to wait till there's just absolute agony in the market and then reload my position. That's how I like to manage my risk in trade. But if you're someone who just wants to go signal to signal, the capital's of no issue to you. You just want the maximum gains that you can get. You could throw $1,000 in here, never go below water, and you could turn that all the way into 48K at the very top. Now, are you going to know it's the top? No, you're not. And if you use more margin, if your broker requires more margin, does this percentage go down? It does. So again, if we go to, let's say, $5,000 even, and we generate the same report, you can see 496%. That's our actual return compared to what our buying power is returning, right? So just want to be clear on that. But at the end of the day, you can see here, hey, if we started at 5K, we still ultimately got up to that level and even a little bit above it using 5K. So you can see the differences there, which are all great. So going off of net profit, I'd say the US dollars or whatever currency you're using is going to be a lot more important than a percentage on futures for the reason I just mentioned. But overall, everything looks great. We have about that 1 out of 3 on the long, only the long and the short for Bitcoin. If you're someone who's a little more risk averse, you might want to get into more of the shorting, scenario. But you can see you are going to take these big drawdowns, and even on a very small account, we're still able to eke out, assuming your broker is able to handle it. 1192%, not too bad for 101 closed trades on the 5-minute chart. This absolutely crushes the S&P, crushes the index, it crushes buy and hold, DCA. This is just obliterating everything, especially on these shorter term and both directional plays. That's going to be it for my ramblings today. This will be the video of the week. I'm doing one video per week for y'all. I don't want to burn any of y'all out, and also want to let the market aggregate data so we can give you the best possible data in a snackable format of around 15 minutes. My name's Ryan, CEO and head quant here at happytrader.io. Have a great day and happy trading.